This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed, live on Bloomberg Radio and Bloomberg Television. Carol Massar, along with Emily Garfeo, in for Tim, who comes back on Monday, and then I go away for a couple of weeks. So a little bit of a switcheroo. Good to have you here on what has been a wild week, a jittery week. Stocks down. Yields, we've seen some significant moves. We're going to get into that in just a moment.
Yeah, it's been a very risk-on day, at least when you look at where the indexes are moving, but those bond yields are moving up higher again.
Exactly. So we're going to get into some of the underlying reasons. All right, and don't forget Bitcoin topping 77,000. For whatever that's worth, we like to point it out. If I was Tom Keene, he would call it
Bit dog.
You got it. All right, so let's get to it, folks. We are going to get the week that was, the week of whiplash that was in US Treasury yields. What's yet to come? We've got a great roundtable. Bloomberg's Ira Jersey and Sarah Hunt at Alpine, Saxon Woods sitting down already, so we're going to jump to them in just a moment. Also, we're going to get the wrap-up from the White House, everything from the latest on U.S. threats against Iran and then to beef prices, something we've been following a lot here at Bloomberg.
And we're also going to get a view from the C-suite with the CFO of ITG Communications and the probe, Carol, into Guggenheim's Mark Walter and his businesses.
Yeah, leads us to this little known firm. You might not know about it. Folks on Wall Street might, but we're going to dig into that in just a moment. It is, by the way, a Bloomberg exclusive. All right, let's get to it. Let's get to the trade on this Friday. Matt Piper is in for Charlie Pellet.
Hey, Carol, thank you so much. Traders are questioning what Treasury Secretary Scott Bessent's next move will be after a turbulent stretch for the U.S. bond market. However, stocks seem to be ending this week in the green. We do check markets for you all day long here at Bloomberg, so let's do that right now. With 2 hours left of trading, the Dow is up 441 points, or 0.8%. The S&P is up 33 points. The NASDAQ is up 0.4%, up 106 points. The Bloomberg Dollar Spot Index is down today 2 points at 1191. Treasuries have slipped, led by the short end after data showed business activity grew at its fastest pace in more than 4 years, backing the case for interest rate hikes. The 2-year yield right now is up 4 basis points. The 10-year yield is up 3. The 30-year yield is up nearly 3 points. Taking a look at oil, Brent is at $94 a barrel. WTI is at $87 a barrel. Bitcoin, doing well, topping $77,000, heading toward its biggest weekly rally since 2023. Its exact price right now, $77,400. Well, for those of you listening in a car, let's talk Tesla. Tesla and at least 8 other car makers are recalling millions of cars in China over safety concerns with their door handles. More than 4 million vehicles are affected. Turns out they have electronically controlled handles that can stop working in some crashes. Tesla's stock right now is up 5%. And just in on the terminal at Bloomberg, former senior Bank of America investment banker Jason Satsky is accused by the U.S. Securities and Exchange Commission of providing an insider trading tip to a friend who allegedly made $18.5 million in illegal profits. More on the Bloomberg terminal on that. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Matt Piper, and that's a Bloomberg Business Flash.
All right, gotcha, Matt. Thank you so much. Matt Piper in for Charlie Pellet. All right, let's start out of D.C. Some of the threads we're following when it comes to the White House and geopolitics. President Trump saying he would allow tariff relief for some ground beef imports in a bid to lower prices for American consumers, thinking about the midterms. Treasury Secretary Scott Bessent vowing to ramp up pressure on Iran by targeting its economic partners. We are maybe thinking something's going to come on Monday. He told CNBC that. And then you've got some stuff from Iranian president.
Yeah, Iran's president urged an end to the war with the U.S. in his latest pushback against hardliners who want to continue the conflict.
Yeah, so the back and forth. There's a lot, always. Jeff Mason has to keep track of it. He keeps track of it for us and all of us here at Bloomberg. He's Bloomberg News White House and Washington correspondent. He does join us from D.C. So, Jeff, let's start with this nearly 6-month-old war with Iran. Beijing, main buyers of Iranian oil. We talk about that a lot here at Bloomberg. Will China provide the biggest test of Washington's determination to basically follow through on these economic threats?
Well, it'll certainly be one of the biggest ones, Carol. And I think for context, it's also important to note that this comes ahead of President Xi's visit to Washington next month. The president of the United States, President Trump, went to Beijing earlier this year for a very formal visit, and he's doing a reciprocal visit with President Xi in the fall. So this issue will be one of the things that's on that list of things, no doubt, that they'll have to talk about, in addition to multiple other pressure points in the relationship with regard to foreign policy and economic policy. But certainly right now, with this focus on Iran, the fact that China is a big buyer will be a testing point, both for the Chinese-U.S. relationship and for the Trump administration's plan right now to put economic instead of military pressure on this adversary.
Okay, well, let's stay on Iran, because Secretary Bessent said that the U.S. will soon unveil its plan to economically isolate Iran and its trading partners, what President Trump has called an economic D-Day, to end the stalemate in the Middle East. Secretary Bessent spoke to CNBC. He said he would hold a press conference on Monday. So tell us about this. Is this actually happening now?
Well, TBD. Let's wait and see what they say on Monday. What I can tell you is it is the next stage of their plan in terms of this conflict with Iran. And it's interesting to stand back and just look at that. The president, of course, launched the war against Iran with Israel almost exactly 6 months ago. He was clearly expecting it to go quicker. He had expectations that the people of Iran would stand up and take over their leadership. That has not happened. The war has not ended as quickly as he wanted. He has not gotten the capitulation that he wanted. And he's facing a midterm election where Republicans and Democrats are upset about the high cost of living, in part because of the ramifications of this war. So the next stage, instead of an additional military conflict, is this economic piece. And the challenge, of course, there, although, of course, we'll wait to see what Secretary Bessent has to say, is Iran has faced economic pressure from the United States and its allies and other countries around the world for decades. So the question, I think, will be that we'll be waiting to answer on Monday is, how do you ratchet up the pressure in a meaningful way that can have the intended effect? And that's for the administration to answer. We'll see.
Right. And Iran has shown that it's willing to put its people through some economic pressures to get its own goals and aims, if you will. Hey, one last thing real quickly, Jeff. President Trump heading to South Carolina, we know, to basically rally for Senator Darlene Graham ahead of a runoff. He's got something to talk about. He's looking to lower beef prices, although the devil's always in the details. But what do we need to know? It seems like the president is focusing a little bit more on those midterms, just quickly.
It is. Two things quickly on Darlene Graham. He endorsed her. This, of course, is the sister of former Senator Lindsey Graham, but she hasn't been doing great. She had an answer in a debate just a few days ago about foreign policy that drew some boos in the crowd because she conceded that she wasn't really a foreign policy expert. With regard to beef, I think you're right to say that is done with the midterms in mind. He's trying to bring down prices on meat for consumers who are concerned about high prices, but that also has a potential to backfire because it might be seen by ranchers who are struggling as a way of helping importers rather than the local producers of beef that the president wants to build up.
He's got another thing, Jeff, to talk about. The Supreme Court's John Roberts issuing an interim order in the ballroom case, and he's letting the president keep on building that ballroom for now. So he gets to kind of keep on with that as we continue to kind of follow.
Breaking news there, and that's certainly exactly what President Trump wanted to see.
All right, well done, well done. As always, you have a good weekend. That is our Jeff Mason. He is, of course, our Bloomberg News, White House, and Washington reporter joining us there from D.C. Hey, now let's get to what has been the week of whiplash. I can't say the word. When it comes to U.S. Treasuries, and really a focus on rates, too, around the globe. We've got a great roundtable. Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist, and Sarah Hunt, Chief Market Strategist at Alpine, Saxon Woods, both here in studio. Traders are increasingly questioning what Treasury Secretary's next move will be after what's been, I think it's safe to say, a bit of a turbulent market, bond market this past week. Sarah, how do you see it?
I think that it was a surprise that he came out and said, this is what we're going to do in the long end of the curve. I think everyone's been looking at Warsh, Chairman Warsh, and looking at the Fed and seeing what's going to happen with interest rates there. I don't think that people were expecting the Treasury Secretary to come out and make his own news on this particular front. And I think there are, as you can see, quite a lot of questions about, one, how this is actually going to work mechanically, two, whether or not this is going to actually help the long end of the curve, which was arguably the idea, because you've round-tripped that already.
Because it did and didn't.
It did and it didn't. And on the other hand, gold is just like, okay, we're gone.
Yeah.
And it just is going again today. And I think that that's, whether or not the only signal that gold gives is that we don't like anybody else's decisions, or it's just a way to play a different angle. I think that you're seeing that reverse in interest rates didn't reverse gold. So that may be an anticipation of further movement.
Gold up 5% this week.
Yeah.
So, we've seen a big move.
I mean, Ira, where do you stand on this now that this is Friday? It's been a couple days. Yields are still moving up.
Yeah, well, yields are kind of flattish, right, from the beginning of the week. So, yeah, it did a whole lot of nothing. Devil is in the details here a little bit. So, we won't find out the exact size. He says maybe next week that they'll tell us more information. I did think it was really funny when Scott Bessent said, we're doing this because there's, low liquidity in the middle of summer and things like that. But this doesn't start till September 9th. So I'm not exactly sure.
That's technically the summer, right?
I guess, but it's not August. It's not now, right?
Not the summer.
And in fairness, I was looking at the depth of the market actually right around the time that he said that, and actually the depth of the market was not bad, right? The depth of the market was your typical summerish levels, not insanely low. So it's not like they really needed the direct liquidity support here.
That's what I was going to say. Political, or did the market need this, Sarah?
So it's interesting. I think that people have been concerned globally about rates rising, especially on the long end. And that's been a problem for investors. It's been a problem for all these companies that are now trying to finance the entire AI build-out.
Government.
So the question is, are we doing something because this exact amount of money is going to make a change? Or is the fact that we're saying we're going to do something reminding everyone that the government can come in at any time and change the game? And I think it's a little bit, to me, of that. I don't know how you feel about that, Ira, but that was, my take was a little bit like, we're going to do something and not just stand there and let the market figure it out. Yeah,
I think they did this, and it was kind of underwhelming, right? It's kind of like the Federal Reserve in December of 2007 when they did a $40 billion program for a $300 billion problem, and it's something like that. Maybe there will be a little bit more shock and awe, but there are risks to what they're doing too, right? Like if they're going to issue a whole lot of T-bills in order to buy back a lot of debt, and let's call this what it is. Yeah. If it's going to work, and if the president and Treasury Secretary are really serious about getting long end yields down, they have to do this in size. And we have to then call this an Operation Twist, similar to what the Treasury Department did in the 1960s. And if they do that, the one big risk for them is what happens if the Federal Reserve has to raise interest rates, because they're going to be issuing T-bills, which capture that interest rate move almost immediately, compared to 30-year debt, which obviously takes 30 years to recapture that new interest rate environment.
Sarah, what do you think it means for the Fed? Does this at all kind of alter when we do get a move from the Fed?
I'm not sure what the answer to that is, and I don't know if there's any actual coordination going on that we don't know about. I mean, what we see is what the headlines are. We don't see what everybody's talking about behind the closed doors. So whether or not there is a conversation, I couldn't tell you. One would hope that there might be some sort of coordination, or at least an understanding, because otherwise then you start to look like you've got government departments fighting one another. So what's your take on that?
Well, I think that they're not coordinating, because if they were coordinating, then the Federal Reserve would not have stopped buying T-bills. Yeah. The Federal Reserve was doing these reserve management purchases, buying $10 billion of T-bills every single month. So if they were coordinating, and Treasury Secretary Bessent said to Kevin Warsh, hey, we're going to be issuing more T-bills to buy 30-year debt, how about you buy some of those T-bills? Well, the Fed's not buying those T-bills. So if there was coordination, it was pretty poor.
Is this President Trump potentially too saying, hey, Scott Bessent, I need you to do something because my Fed chair isn't doing something? Is it possibly?
Absolutely possible, right? Because again, I think we're all trying to understand, struggling to understand exactly what the point is in the timing frames.
So fast forward. Okay. So do we get answers at Jackson Hole this coming week? I mean, we have a Fed chair who has already shown he doesn't like to say a lot or lay out the metrics of what metrics he is following and the Fed is following, the FOMC, in terms of figuring out monetary policy. Do you think we're going to get anything this week?
Well,
More
he's told
specificity?
us he's going to frame the big questions, and
You can lay them out, but if you don't say what you're following,
well,
right?
and this is the challenge that Kevin Warsh really has had, and I don't think he's done a particularly good job in communicating with the markets, because you have to give the markets something, right? You can't give them nothing, and he's basically given the markets nothing. So he has to either say, give some kind of forward guidance, or say, if this happens, then we will react this way. So give a reaction function. You have to do one of those two things. It's interesting because he put Mervyn King, former Bank of England governor, on the communications task force. This is what Mervyn King wants to do. He says that, hey, we want to give the reaction function. We don't want to give forward guidance. But Kevin Warsh clearly has, if he read that paper, then he's not following it for sure.
Well, and I also think that you're at the point now where you have to really look at that speech. If it was going to be under a microscope, now it's under 5, right? Because now you went from we're all
every LLM
on
is going to get that speech, and we're going to get analysis.
And everybody was focused on the Fed, and then they turned to the Treasury. So now the Fed's now they're extra focused on what they're going to say. And the fact that the communication has been, I would say, uneven is a word that you could use, doesn't help the situation. And I think that it makes it more important to clarify whatever. So I think Jackson Hole is, we're all going to be sitting around on Friday watching what's going on.
And we'll probably all fall asleep because it won't be very interesting.
But we're going to have to watch it anyway.
Scenery in the background, relaxing.
Well, we're all going to be waiting for the walk, right? We're going to be waiting for all the central bankers.
Tom, Mike, and Lisa are going to be there. It's going to be interesting. Sarah, layer on top of this, and we've already talked with Ira about this, about the data center build-out. And you write in your notes, the pushback against data center build-out could be a blessing in disguise, as well as investor concern over CapEx spending has been growing as the hyperscalers commit ever more equity and debt to the build-out. We've been talking about how the hyperscalers and everybody AI-related tapping credit markets and what that's done to maybe crowding out the Treasury trade. How worried are you about all of this tapping of the credit market for these AI guys?
I think that there was definitely concern about how much money was being raised, how fast, and at the same time, you've got the government racing into raising. I mean, everyone's raising money, right? So that was an issue. Whether or not this money is actually going to have a return on investment is another question that people have been going crazy about. The idea that it's an arms race, that you have to spend faster than China. The fact that there may be a bottleneck could be a blessing in disguise, just in the fact that people are worried so much about that spend and how much of that spend is coming out of debt and equity and no longer cash flow. And if that slows down, maybe that gives investors some room. Whether or not that becomes a further race to the top between China. I mean, I'm not sure how to look at that CapEx relative to other things, and I think that investors are struggling with that.
Hey, join the crowd. I don't know how to look at it either. Like, I feel like increasingly we say this, we see the headlines, we see the spend, and we're trying to put it in context.
I also want to ask you about where equities go from here, especially if rates stay high.
Yeah, equities.
Because, we haven't really seen, I mean, even this week, it hasn't been carnage in the S&P 500. But the 30-year yield is, it's at these highs. Does this continue, or is there really going to be some movement?
Well, I sort of think that this is where Treasury came in and did something to the long end, because that was starting to get investors worried. And you were seeing the S&P start to degrade, and the indices and other stocks underneath it as well. It's really going to be, it's a combination of it's going to be about earnings. And somebody made the point this morning, and I can't remember who it was, they were saying, earnings are great, but people are outspending those earnings. And that's a really good point, because as we get into 2027, are we going to continue to up the ante on spend, and are the earnings going to follow? And I think that that's really, earnings is the biggest problem or benefit to the S&P. And right now, that's all been working in everybody's favor. If that starts to trip and that second derivative starts to go, it doesn't even have to go down, it just has to grow less fast. And that becomes an issue unto itself, given where valuations are.
Can we just keep going? This was really great. Come back next Friday?
Sure, I'll be in Princeton.
You'll be on vacation.
You'll be on vacation. All right, maybe a couple of weeks from now. Ira Jersey, thank you so much. Bloomberg Intelligence Chief U.S. Interest Rate Strategist, and Sarah Hunt, Chief Market Strategist at Alpine, Saxon Woods. Just a reminder, we did have a headline, U.S. Chief Justice John Roberts saying President Trump can keep building his new White House Ballroom for now, while the Supreme Court considers issuing a longer-term order blessing continued construction of the massive structure.
It is 2:21 on Wall Street. I'm Matt Piper, and we have breaking news out of Washington. Supreme Court Chief Justice John Roberts says President Trump can keep building his new White House Ballroom for now, while the court considers issuing a longer-term order. And that means construction on the massive project, yes, can continue. Roberts' interim order comes after lower courts said that the president was flouting the law by proceeding without getting approval from Congress. More on this coming up right here on Bloomberg, as well as on the terminal and on Bloomberg.com. It's the final countdown amidst a crazy busy week on Wall Street. We check the markets for you all day long here on Bloomberg. Let's do that right now. The Dow is up by 450 points. The S&P is up 33 points. The NASDAQ is up about 100 points, or 0.4%. Taking a look at oil, Brent is at $94 a barrel. WTI is at $87 a barrel. Bitcoin still seeing some of its biggest highs in several years, up 6% right now. Bitcoin's price, $77,419. Well, adding to big IPOs, Nscale says, hey, wait for us. The AI cloud company out of London is looking to raise as much as $3 billion in its U.S. IPO. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Matt Piper, and that's a Bloomberg Business Flash.
All right, gotcha, Matt. And just to reiterate what Matt just mentioned to us, U.S. Chief Justice John Roberts saying President Trump can keep building his new White House Ballroom for now. This as the Supreme Court will continue considering issue a longer-term order blessing continued construction of the massive structure. So it's an interim order coming after lower courts said the president was flouting the law by proceeding without congressional authorization. Under a federal appeals court ruling, the president would have had to stop construction today without that Supreme Court intervention. We're going to check in with our own June Grasso, who follows all things in the world of law, and we'll get to that in just a moment. In the meantime, we want to get to the world of the C-suites and what's top of mind. And this next company went public just about 2 months ago, and it also just came out with earnings. Stock did sell down following the release and quarterly update. We did see earnings fall. Revenue rose. The company put out also third quarter guidance. Stock, though, down about 20% since that IPO on July 1st. We wanted to get into the business and the outlook, so we're delighted to have another edition of CFO Briefing. For that, we welcome Chris Mecray. He is the Chief Financial Officer at ITG. It is a more than $1.5 billion market cap company. It was backed by Oaktree. It is a digital infrastructure services company, and as we said, IPO'd on July 1st, and also the leader of our CFO coverage, Nina Trentman, Bloomberg News senior editor and editor of the CFO Briefing newsletter, comes out every Friday. Let's get to it. First of all, Chris, tell us exactly what you guys are doing. I always like it. I said kind of what you are about in terms of digital infrastructure, but what markets do you exactly play into?
Yeah, well, thanks for having me. We are primarily involved in building out fiber optic infrastructure for communications service providers, big clients like Comcast, Charter, TDS, Zayo, Ziply, a whole variety of overbuilders out there, and great up and coming service providers in the industry. So we're out there every day, digging and trenching for fiber optic on long haul routes. We're doing middle mile routes to connect data centers, to help build and construct data centers, and we're even visiting homes and helping install service for consumers out there around the country.
Chris, thanks for joining us. Carol just mentioned your recent IPO. You listed just over a month ago. Just wondering, talk to us a little bit about the decision to list at this point in time. Like, why was now or recently a good time to list your company on the public markets?
Well, yeah, the company's been growing very, very rapidly over the last 10 years with really, significant growth in the last 3 or 4 years. So the trajectory of growth is there. The appreciation, I think, in the market for the need for infrastructure investment is there. And so I think, we provide another avenue for investment in a space that, arguably had very few assets for folks to go and look for. So, we have good competition out there, but I think there is a hunger for more plays in our space in this kind of specialty angle within the engineering and construction space.
So tell us a little bit about that specialty angle, and to what extent is the AI infrastructure build out driving growth?
It's a significant growth driver, but I think there's probably two aspects to this. One is that the U.S. infrastructure writ large, and the communications infrastructure is no exception, is old, it's aging, and it's underinvested. So there's a multi-year build out out there to both replace and upgrade communications infrastructure. And this is, that switch from coax, the old coax cable that everybody had in their homes, to, much broader, bandwidth fiber optic. And so there's that aspect itself is a significant growth driver. When you add on to that the AI boom and what that does as opportunity, it creates a whole nother leg of opportunity. And so obviously data centers require a high bandwidth fiber optic, and obviously that has to get done, and it has to get done by machines and people digging and installing and creating networks out there. So we are effectively the picks and shovels of the AI boom. And we and our peers out there have a long runway of opportunity associated with creating the connectivity that data centers require once the actual site itself is built.
Hey, Chris, one of the things that we noticed we just talked with Sarah Hunt, who is Chief Market Strategist at Alpine, Saxon Woods, and she has been noting how the pushback against that data center build, she says it could be a blessing in disguise because there's so much concern about CapEx and things getting ahead of itself. But I am curious how concerned you are about a potential downturn in that AI and data center build and the industry overall as we kind of try to find our way forward. And there is increasingly that nervousness about maybe too massive a build out and maybe the demand won't be there.
Yeah, I think what you're seeing is that when you look at the total expected CapEx that's been out there of people looking at the data center build outlook, you could question the timeline of that based on financing availability and funding availability. And to some degree, you could question the need for it when you look at all the capacity writ large that's been discussed. Fortunately for people like us who are actually doing the initial builds today, we don't need that total aggregate spend that people are talking about to be realized in order to create a long runway of growth and opportunity. And frankly, it probably is healthy to see a little bit of a trim back against some of the more optimistic expectations out there. But regardless, there's still going to need to be a tremendous amount of capacity built incrementally from where we are today. So even if it ends up being 50, 60 cents on the dollar versus the total forecasts that are out there, that is okay, because that would represent a tremendous amount of opportunity and investment before you sort of run out of runway. That's years and years of build that's going to be required.
But that says to me 50, 60 cents on the dollar. It could be half of what we are expecting, or 40% less of what we're expecting, right?
And that's not, I was just providing an illustration. Obviously, it's not a forecast, but you're right. I mean, if it is less than the total of what people are expecting, there could be assets out there that trade off on that incremental change in expectation. I'm just saying you have to be very careful about the asset class you're talking about, because infrastructure generally does not rely on the realization of a total growth forecast that could be the most optimistic, frankly.
What do you then make of the recent changes in your stock price? It's been down since the IPO. Is that just an adjustment since you started trading on public exchanges, or do you also see that that's a concern from investors in your business?
Yeah, so our stock performance, since we came out, has been essentially in line with peers. So there has been some increased volatility in the space over the last 6-8 weeks, and that's a fact. That's okay. We're willing to be patient because our growth is going to be significant. And we're pretty confident that investors will, once we see a series of prints and a series of significant, growth prints, realize that they'll come around. So yeah, the stock's been a little bit weak since the IPO. Again, tracing alongside peers, and there's been a little more volatility in the space associated with the kind of discussions that you were just referring to around, kind of the pace and opportunity in the AI boom.
Okay, but looking forward, what can you do now as a public company that maybe you weren't able to do when you were still private?
Well, we weren't short on capital, but obviously when you're public, it does open the aperture for capital and access to capital. It also gives us a higher overall level of visibility. So I think it helps us in some regard stand us apart from some of our competitors, many of whom are smaller regional providers out there. So it gives us both a bigger, louder platform, and it gives us long-term, sources and access to capital.
And just wondering, in terms of the use of the proceeds from the IPO, I think one element was also debt pay down, if that's correct.
Yeah, there was a dividend recap last year for us that raised our debt profile, and we were able to use the IPO proceeds entirely, primary proceeds, to pay down debt and recapitalize the balance sheet.
It's interesting. We love, Chris, talking to the C-suite, because it's just, there's a lot coming at certainly investors, markets, anyone who runs a business or an institution right now. And there's a lot of uncertainty. We obviously are focused on interest rates and things like that are out of the White House, policy, this war. What's top of mind for you? And we just talked about AI being a big concern, that narrative changing. But I am curious what you watch very closely, the metrics that matter to you.
Yeah, it's funny. You can spend all day reading the papers and looking at the macro and worrying about White House policy and whatnot. But the reality is that for most people in the C-suite operating every day, we're just responding to customer needs. We have a broad set of dozens of customers, all of whom are looking at significant spending growth and significant CapEx, essentially, things they got to put in the ground and networks they have to put together. And we're out there making sure that we can service those customers, that we have the capacity to do that, and that we can function and operate effectively along the way. So it's really a micro focus. And while I have one eye on the macro all the time, and I'm constantly monitoring the markets, I find when you're sitting in this seat that you're better off focusing on the business and making sure that you're executing and not spending all your time worrying about where interest rates are going. It is fortunate that a business like ours isn't as interest rate sensitive as many others. But for us, it's all about execution. So I spend more time thinking about where we're going to get good people and do we have enough capacity and equipment to meet our customers' needs. And then, blocking and tackling, how do you convert projects to cash through, proper collections and so forth to get the job done. So it's much more of a on the ground focus. But I'll tell you, what we're hearing from our customers continues to be very, very optimistic, significant amounts of spend that they're looking to do. And we're getting awards, every week for more work out there. So there hasn't been any slowdown. In terms of the on-the-ground reality in our space.
Yeah, it feels like it mirrors a lot of the enthusiasm that we continue to see from the corporate sector and certainly hear from it. You got it, and you're making decisions because you got to move forward. Chris, thank you. Thank you for finding time. Really appreciate it. Chris Mecray, he's the Chief Financial Officer at ITG, joining us here on this Friday, along with our own Nina Trentman, Bloomberg News Senior Editor and editor of the CFO Briefing newsletter. You can subscribe to it at bloomberg.com/CFO briefing, and be sure to check it out on the Bloomberg terminal. Comes out a new one every weekend. Hey, when we come back, we're going to get the latest from Chief Justice John Roberts on President Trump's ballroom. In the meantime, we'll get to that in a moment, but let's get another check on the trading session on this Friday. Here's Matt Piper.
Hey, Carol, it is exactly 2:35 Wall Street time. The final stretch of a jittery week on Wall Street is seeing stocks rising amid solid economic data, with traders weighing the outlook for bonds after a burst of volatility. We check markets for you all day long here at Bloomberg. Let's do that now. The Dow is up 483 points. The S&P is up by 30. The NASDAQ is up 78 points, or 0.3%. The Bloomberg Dollar Spot Index sits at 1191. Investors are assessing the fallout from a recent spike in bond yields that was fueled by worries about inflation, prompting the U.S. to intervene to curb longer-term borrowing costs. They're now awaiting a promised new initiative from Treasury Secretary Scott Bessent aimed at fiscal consolidation. The 2-year yield right now is up 4 basis points. The 10-year yield is up 3 basis points at 4.73. Iran's president is urging an end to the war with the U.S. in his latest pushback against hardliners who want to continue the conflict. He says, quote, "It would be better to end the war today when we have power and dignity and with the whole world acknowledging our victory." Oil prices in response to that, little changed. Brent is trading at $94 a barrel, WTI at $87 a barrel. Bitcoin topping $77,000, heading toward its biggest weekly rally since 2023, and the dollar is hovering near its lowest since May. Apollo Global Management says hackers breached its systems in July and accessed personal information following a spate of attempted or successful cyber attacks at major hedge funds in recent weeks. This incident happened between July 6th and the 10th, and the data breach included names, birthdays, social security numbers, other contact information, and addresses. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Matt Piper, and that's a Bloomberg Business Flash.
All right, gotcha, Matt. Thank you so much. Again, a headline that just moments ago across the Bloomberg, President Trump said he, actually, is this a news story? Oh, sorry. This is what happens when you jump around on stories. Chief Justice John Roberts, said President Trump can keep building his new White House Ballroom for now while the Supreme Court considers issuing a longer-term order allowing continued construction of the massive structure. Let's get to it with Bloomberg News legal analyst June Grasso joining us here in studio. Sorry, I popped back to an August 7th story when he was, I think, appealing and wanting this.
Yes.
What does this mean?
It means that the stay that the D.C. Circuit had put into effect, because they said that the building of the ballroom required Congress's authorization and it was illegal. So that stay will now not go into effect because the Chief Justice has put an administrative stay on that. So that means that he can keep going until the Supreme Court issues its full ruling. It takes 5 justices to issue a stay. So that will be coming up. And I anticipate that the Chief Justice wouldn't have issued this if he didn't think that they were going to let the ballroom go ahead. I mean, there have been 2 times I can think of in big cases where they've stopped President Trump. So this shouldn't be a surprise, really.
There is a hole in the ground, as somebody said. I mean, they got to do something at this point.
Right. But what do they have to do? Do they have the National Historical Society or the Preservation have some input into what this is going to look like, or is it just going to be what President Trump wants? And as one of the judges said on the D.C. Circuit, the president doesn't own the White House. The president is an occupant of the White House.
It's the people's house, isn't it?
It is the people's house, though you'd never know it. So, what they're also saying is they've done this where they're saying it's a national security issue now, which I don't know. We haven't had that problem for years. And is he going to be going from wherever he is in the White House over to the ballroom and under the bunker? I don't know. It all sounds very, very mysterious and suspicious in my mind.
Okay, but realistically, the longer the construction goes on, the harder it would be for anyone to try and push back on it, right?
Well, that's what they've said. They've said it's 60% done. They're working 20 hours a day. They have hundreds and hundreds of people working, and that's why they're doing it. But this is the modus operandi of President Trump. He does things, and then when the courts can't catch up to what he's doing because he just barrels ahead. Yeah. I mean, the East Wing came down. It was like down. All of a sudden it was down. Same thing happens it's been happening since the very beginning of this administration. Do you remember when Judge Boasberg said, turn those planes around, sending those Venezuelans to that prison in El Salvador? Right. And we didn't do it, and now they're in El Salvador. Who's going to bring them back? And that's been happening over and over and over again. A judge in Minnesota said there are like 100 orders that the Justice Department hasn't obeyed in the last few years in immigration cases. So it's nothing new.
What's the legal power, if you will, of anybody who still wants to prevent this from ultimately happening?
I think that they've done what they can do. And now that it's before the Supreme Court, that's going to be the final answer, whether they're going to make a ruling based on, what the law is and describe it, or whether they're just going to say, it's gone too far. And what else are we going to do? I mean, he's put them in this position. It's a very hard position to put them in because, as you said, it's already 60% complete. And they've been allowed to the D.C. Circuit allowed them to keep working while this was playing out. The federal judge said, you can't do this. You can't do any more stop construction. But the D.C. Circuit said, while this plays out, go ahead. So
Yeah, kind of fascinating. The point is, though, things like this would normally go through Congress. Who's paying for this? Do we ultimately know that?
They say that partly private donors. I don't think we really know who's paying for it, but in a lot of these projects that start out as supposedly private donors, it ends up being taxpayers.
And that's why it normally goes through Congress, right? Because it involves taxpayer money to some extent.
Right. And also, it's just, it's the law that this kind of thing, it's a congressional duty. It's not, what president do you know before this?
I know. I'm just trying to find the rules. I want to understand. You're the legal expert.
I have to look back to George Washington and see if he even had that much to do with it.
As some would say, June, and you know all too well, we're living in interesting times and unusual times.
We definitely are.
Good stuff. And that, of course, is our June Grasso. She is our Bloomberg News legal expert. Check out her broadcast and podcast. You can find it on Bloomberg Radio at 10 a.m., 6 p.m.?
6 p.m.
6 p.m.
and 10 p.m.
And 10 p.m. I knew it was both of them. Okay. Good stuff. Good stuff. And there's stuff on the, you can also read about this on the Bloomberg Terminal. Speaking of the Bloomberg Terminal, there's a story that is definitely of great interest to the Bloomberg community, the market community, right?
Yeah. It's all about the probe into the business of Guggenheim co-founder and CEO Mark Walter. Of course, he just sold off the LA Lakers, and reports talks about other possible asset sales. And it's all about the insurance companies of Guggenheim.
I feel like we keep learning more and more about this story, but it's wild. We did have a team of reporters finding out exclusively that the investigation into his businesses, his insurance business, has also led to the Department of Justice to a small but prolific credit rater. So let's get to it. Here with the team's reporting, and then one of the journalists on the story is Ava Benny-Morrison. She's Bloomberg News senior legal reporter. She joins us here in New York City. Ava, thank you for coming on. We've been talking about this story a lot. Start with the investigation. Why is the Justice Department seeking records from Egan-Jones? What do we need to understand about how this investigation continues to evolve and why they are all of a sudden this small, little known maybe firm, but as we know, a prolific credit rater is all of a sudden now a target or at least of interest for the DOJ?
So a key part of this investigation is looking at how some of the insurance companies linked to Mark Walter made loans to affiliated parties. Originally, these transactions were marked as unaffiliated, but it's since turned out that the insurance businesses have had to restate $20 billion or so worth of these assets. And along with that, many of the assets had investment grade ratings from this credit rater called Egan-Jones. So what we've learned over the past few days in our reporting is that the DOJ is requesting information from Egan-Jones about these ratings. So they've asked for material related to Delaware Life and Clear Spring as well. This doesn't suggest that by any means that Egan-Jones is a target, but sort of shows the wide net that prosecutors are casting to try and figure out how billions of dollars worth of loans from these insurers ended up being funneled out to affiliated parties.
What does it signal when an insurance company is using a credit rating firm like Egan-Jones? They're approved, they're able to give credit ratings, so it's not necessarily bad, but what can we learn about, the fact that this company was working with this particular rating agency?
Look, I think, these insurance businesses were big clients for Egan-Jones. I think from what we can gather, at least a fifth of the assets related to Mark Walter's insurance companies relied on Egan-Jones ratings. So I think it shows, despite Egan-Jones being a relatively small firm, it does play a really outsized role in rating a lot of the assets in the insurance industry, particularly at a time where Wall Street has really seized upon using policyholder funds for other investments.
Right. And as you guys remind us, an investment grade rating from a firm like Egan-Jones can help lower the amount of capital that insurers must hold in case the assets sour, so allowing them to run essentially their businesses more efficiently. It's just kind of a good understanding. Ava, we were talking about this after this story broke, and it's just this idea, we saw it during the mortgage meltdown and the 2008 crisis, that kind of somewhat cozy relationship, right, between ratings agencies and the companies that need those ratings. I'm not saying anything is untoward, but what are we hearing from the company, from the U.S. Attorney's Office in Manhattan, from TWG Global? Like, what are they all saying about this?
Look, I can definitely speak to the U.S. Attorney's Office in Manhattan, because that is a key part of my beat. And we've heard from leadership over the past 12 months that they are very interested in what is happening in private credit. It's going up, it's going down. They're looking at how it's grown so quickly, whether marks are being applied correctly, and how the role of these third-party firms, what role they kind of play in assuring investors that this stuff that they're investing in is in fact investment grade. And ratings agencies are one particular area that prosecutors have been very much interested in.
Okay, so you're following this story. There's a lot of layers to this, this kind of saga here. What is top of mind for you? What are you watching next as you continue to kind of report this out?
Yeah, absolutely. So I'm keeping a keen eye on how this all ends for Mark Walter. We've seen that he has started selling down some of his assets. So, for example, selling his stake in the Lakers recently, or agreeing to it at least, and seeing whether by the insurance companies saying that they're going to restate a lot of these transactions and some of these loans are going to be paid down, whether that's enough for regulators and for the DOJ to be satisfied with that as an outcome, or if the investigation continues at full throttle and we see some kind of penalty for some of the players involved here.
How long might it take to get some kind of resolution about what's the next step forward here, especially on a legal basis, just quickly?
Yeah, look, financial crime cases, investigations can take a very long time. We know this one has been going since at least the fall last year. So it's anyone's guess, really. It could take months, it could take weeks. We'll just have to watch and see.
Yeah, it's very interesting. We know it's certainly something that's always top of mind for folks here on Wall Street, and certainly those who read into the Bloomberg terminal. Hey, Ava, thank you. We really appreciate it. Ava Benny-Morrison, Bloomberg News senior legal reporter, joining us there on this Friday. Yeah, we'll just got to keep a watch on it, but it's certainly the reporting that's being done, the original journalism on this is really fascinating here at Bloomberg. Hey, folks, we have got about a minute and a little bit more than an hour to go until we wrap up the trade on this Friday. And we've got a day where the tone is a little bit different than what we saw certainly yesterday, Emily. Yeah,
I mean, we are going to finish the week lower on the S&P 500.
Across the board.
But at least today, maybe the liquidity is a little thin. It is a Friday in the summer, but it is risk on when you look at S&P 500. Bitcoin, like you said, is higher. Vol is down. And even those economically sensitive names that were lower yesterday, like the Russell and the Dow, those are actually rallying today too.
So we're seeing some move to the upside. We've also seen yields move up once again a little bit. But as we heard from our Ira Jersey, for the week overall, despite
not a lot of movement.
The back and forth.
Funny how that works.
Not a lot of movement. 2-year note with a yield of 423. Longer end of the yield curve, looking at the 10 with 473. All right, stick around, folks. We continue here on Bloomberg Businessweek Daily. We're going to check into some stocks on the move. We'll get to that in just a moment.
This is Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we are getting close to the last hour of trading for the day and for the week overall. Carol Massar along with Emily Garfeo in for Tim Stenovec on this Friday, August 21st. As we mentioned, we've got a market where it's been a little bit of an interesting week, to say the least. We have seen overall stocks lower. They're going to end up the week, unless we see some dramatic rally, they're down a few percentage points on those major averages.
And the top of the Bloomberg terminal, Carol, Dalio says sell bonds, buy gold, Bitcoin as debt crisis looms. This is like the Dalio trade right now, because we are seeing gold and Bitcoin higher, and of course we're seeing those bonds sell off. So I wonder, how did he time that? It was a LinkedIn post.
Before, after, before? I don't know.
He's been saying this for a while, though.
Yeah, that's fair. That's fair. So good for him, right? In terms of the trade we've seen so far. TBD, I feel like the next month is going to throw a lot at investors. Next week, between Jackson Hole and NVIDIA, will throw a lot at investors as well. I'm Carol Massar, along with Emily Graffeo. Let's get to some stocks on the move. Bloomberg News Markets Live strategist Tatiana Daria is with us, and she joins us here in studio. Good to have you here. Where shall we begin?
Well, with the gold trade, right? Because that is spilling over into mining stocks. They are absolutely crushing it. I picked Newmont because that is the only stock in the S&P 500 gold sub-industry here. Most of them are based out of Canada. But these mining stocks have been on a tear. Just Newmont, ticker is NEM, up 47% since July lows. Wow. That is triple the rally in gold. So basically, for those who are late to this party, those who want to bet on the metal, they can look to miners because they always offer sort of a supercharged way. Also because they have sturdy fundamentals that extend the runway in the companies themselves, right? Because then you get to start having better margins with higher prices. So gold mining stocks, watch them.
So they're just up in general and just up again today. So not necessarily a specific catalyst today.
No, it's all on gold, really. Gold is what's driving them today.
Yeah, and gold up about 2.4% right now. All right, going from gold to a discount store?
To the U.S. consumer, right? Ross Stores up about 5% after boosting its profit forecast for the full year. The company said it saw strength throughout the second quarter with sales growth picking up and also supported by new customers, also higher engagement from existing customers. So consumers are doing pretty well from what Ross Stores is saying. They also see comparable sales in the third quarter to higher by 6 to 7%. That is double what analysts expected. So this is really, really interesting because it comes on the heels of that report from Walmart, right? Where we sort of saw some glimpses of maybe the consumers not doing as well as we thought. Maybe it's sort of tying into those deteriorating survey metrics. Well, Ross saying quite the opposite here, that discretionary spending remains quite solid.
All right, interesting on that. We've been watching the retail space in a big way, certainly, and they've been on the move today. Let's go on over. So Ross, ROST is the ticker. Let's go on to MRK. We're talking about a name that's been in the news big time this week.
Yes, exactly. And it is extending those gains today, up about 2% and touching a fresh all-time high earlier. And that's all on just extending momentum from the big news from Moderna on that vaccine, personalized cancer vaccine that combined with Merck's Keytruda helped melanoma from returning in a later stage study. And this was huge, right? Huge for biotech, huge for the healthcare industry, which has been sort of looking for its next catalyst, especially for the mRNA technology that's been looking for its second act after COVID. So after that news, of course, analysts have been boosting their price targets here on Merck. Goldman Sachs was the latest. I think that came yesterday late in the day, boosting its target price to $160. But mostly it's really extending its momentum, which really puts healthcare in a good spot right now, the best performing sector over the past 3 months in the S&P 500. Now I would add, earnings have to deliver on those high expectations.
Yep, got to show it, right, in the numbers. Yeah, that is an interesting name. I was looking at Moderna, man. That one has too had such a big ride this week. Obviously, the other player along there with Merck.
130%.
I know, unbelievable. All right, that is our Stock Movers podcast. Check it out. 5-minute episodes of big winners and losers in the stock market. Our thanks to Tatiana Daria, Bloomberg News Markets Live strategist. Stock Movers podcast, find it on Apple, Spotify, or anywhere you get your podcasts. Before we wrap up, though, Tatiana, you have a story for the weekend, I believe, on profit momentum in the S&P 500, this idea of 8,500. Tell us about this.
Yeah, well, this earnings season has really turned me into a bull here on stocks because what we've seen is something really phenomenal. I mean, the best earnings growth since 1998 outside of economic recession recovery periods. So what we're seeing here is a historic acceleration, which signals signals that we've all been underestimating the power of this AI boom and what it means, not only for the technology stocks, not only for the picks and shovels, but also for the broadening earnings trade. I mean, now I would add that earnings is also doing a lot of the heavy lifting here because of the higher prices. But if you look at those estimates on year ahead, right, the effect from energy will sort of ease, but the rest of the market is growing. And I think earnings will really power stocks higher in the year ahead.
Comparison's getting tougher, though, I will point out. Tatiana, thank you so much. All right, folks, that does it for the first hour of Bloomberg Businessweek Daily. If you're watching on TV, the close is coming your way. Meantime, Emily and I continue right here on Bloomberg Radio.